Ever since proven, the US literally is unable to repay its national debt. Imagine this, the US government owes a massive $34.8 trillion. That's a huge amount of money, right? But here's the thing, this isn't just a number for politicians or economists to worry about. It affects everyone, from your wallet to the country's future. Right now, the US debt is growing quickly. But what does this mean for the average person? And is there any way out of this situation? How the US government gets into debt, like any person or business, the US government has two main things. Income, the money it makes, and expenses, the money it spends. The government makes money mainly through taxes. It collects taxes from people and businesses. However, the government spends more than it collects. For example, in 2023, the government spent about $4.5 trillion, but only brought in $3.3 trillion in taxes. This creates a deficit, or a shortfall of money. To make up for this gap, the government borrows money. How does it borrow money? The US government sells bonds, like IOUs. When you buy a bond, you're lending money to the government. In return, the government promises to pay you back with interest. But here's the catch. Interest on this debt is expensive, and the more the US borrows, the higher those interest payments become. Right now, the US government spends around $600 billion just paying the interest on its debt. Why is the debt growing so fast? Since the year 2001, the US government hasn't had a budget surplus, meaning it hasn't earned more than it spent. Instead, the deficit has been growing year by year. From $10 trillion in 2001, the debt has shot up to nearly $35 trillion today. The big question is, why does the government keep borrowing so much money? One reason is that the US government has big expenses. For example, Social Security, payments to older citizens, takes up a huge chunk. Defense, military spending, is another big cost. Medicare, healthcare for older adults, is also a large expense. But here's the problem. The government can't just stop paying these things. People rely on these services, so the US needs to borrow money to continue funding them. But borrowing more means more debt. Rising interest rates make things worse. Normally, when the government borrows money, it pays back the debt at a certain interest rate. In the past few years, the US government could borrow money cheaply because interest rates were low. But now, things have changed. Due to inflation, when prices rise, the US Federal Reserve, the central bank, has raised interest rates to control the economy. As a result, the cost of borrowing has become much higher. When the government needs to roll over its debt, meaning it needs to pay back old debt by borrowing more, the new debt comes with higher interest rates. This means the US government must pay even more in interest each year, which makes the debt problem worse. What are the consequences of growing debt? As the debt grows, it's harder for the US to pay off what it owes. In fact, experts believe that by 2034, the US debt will be even larger than it is today. The most immediate consequence of all this borrowing is that the US government must spend more on paying interest. As mentioned, this year alone, the US spent $600 billion just on interest payments. But what happens when a country can't pay its debt? Well, if the US government ever defaults, fails to pay back its debt, it would cause a financial disaster. The value of the US dollar could collapse, and other countries who hold US debt, like Japan or China, would lose money. The effects would ripple through the global economy. Can the US inflate away its debt? Now here's where things get interesting. Some people believe the US can solve its debt problem by using inflation. How does this work? Inflation means that the prices of things like houses, food, and services go up. If inflation happens, the value of money decreases. For example, let's go back in time to the 1970s. In 1970, the average house cost just $24,000, and the average worker earned $771 a year. Now compare that to today. A similar house might cost around $400,000, but wages have gone up too. Because wages are higher, it's easier to pay off the mortgage. This is what happens when inflation increases. Things get more expensive, but salaries also go up. So in the future, things like debt look smaller in comparison. For the US government, if inflation continues, the money it owes will be worth less in the future. This means the US could pay off its debt with money that's worth less than it is today. This is called inflating away the debt. However, this is not a perfect solution. If inflation gets too high, it can cause problems. People can't afford everyday goods, and the economy can go into a crisis. That's why the Federal Reserve has to carefully manage inflation. It wants to keep it at a steady level, usually around 2% per year. What can be done to fix the debt problem? So, what's the best way to fix the US debt problem? There's no easy solution. Some people argue that the government should focus on increasing taxes or cutting spending, but both of those options are unpopular. Imagine paying higher taxes or seeing cuts to important services like Social Security or education. These ideas are not very appealing to voters. Others argue that the government should work to grow the economy by investing in infrastructure, education, and innovation. If the economy grows, the government earns more money through taxes and can pay down its debt. In countries like Australia, for example, the government has focused on bringing in more money than it spends. In fact, Australia ran a surplus in 2023, meaning it made more money than it spent. This is the ideal situation. If the government can run surpluses and avoid borrowing too much, it can keep the debt manageable. The US debt situation is serious, but there are ways to manage it. The key is finding the right balance between taxes, spending, and economic growth. It's not just about printing more money or ignoring the problem. It's about creating a smart plan that focuses on the long term. While the idea of inflating away the debt might seem tempting, it's not without risks. The best solution will always be to have a strong, productive economy and a government that spends wisely. The US needs to take action now to reduce its deficits and work toward a more sustainable future. If it can do that, the country will be better prepared to handle its massive debt problem. Outro, stay informed. If you found this video helpful, don't forget to like, share, and subscribe. And if you're interested in learning more about how the economy works or personal finance, check out some of our other videos. Thanks for watching, and I'll see you next time.